It's still in the conversation because of its cultural recognition, the size of the community, the liquidity it maintains among meme coins, and the simple fact that Pepe remains one of the most recognizable names whenever the meme sector heats up. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on Pepe. I actually read them. On the technical side, the bigger picture shows a powerful advance that took the token to multi-year highs before a clear and extended pullback set in. Price has been making lower highs for a long period, with support being tested in the current range near multi-month lows. Momentum indicators cooled significantly after the overbought readings during the peak, and volume has remained elevated relative to many other names but inconsistent on the way down. Moving averages that were sloping strongly higher have turned and flattened. Short term, it feels more like a long corrective phase after an impulsive meme-driven move than a clean continuation higher. You can argue the larger recovery structure from the absolute lows is still intact if support holds, but the immediate picture looks heavy and range-bound after the rejection from the highs. Looking at ratings and signals, a lot of the short-term scanners have stayed cautious to negative after the drawdown from the peak. You will see a mix of hold and sell leaning readings, especially from tools that track the loss of momentum and the break of shorter-term uptrends. Funding and open interest in the derivatives market stay active given the volatility typical of large meme coins. The short-term outlook from pure technical sources remains defensive until price can reclaim and hold above the recent resistance zones with stronger volume. Coverage is high because of the ranking and cultural status, but the consensus from chart-based tools has cooled from the stronger readings during the earlier legs up. What's going on with Pepe right now? The chart has pulled back hard from its earlier peaks. Sell pressure has been visible for a long stretch, and yet you still hear people arguing this thing is somehow undervalued at these levels. How do those two views even sit together? Let's talk about it. Pepe is a pure meme coin launched on Ethereum in 2023, inspired by the Pepe the Frog internet meme. It was a fair launch with no pre-sale, no team allocation, and a renounced contract, meaning no one can change the rules or mint more tokens. The supply is enormous, hundreds of trillions, and the token has no formal utility, no governance, and no product roadmap beyond the cultural meme itself. It currently ranks around the top 50 by market cap, with daily volume still in the hundreds of millions at times, and the price has been trading near the levels you are seeing after a massive run higher in previous cycles, followed by a steep and prolonged correction. Here's the real debate. Is Pepe actually undervalued here, or is this a classic value trap after a massive meme-driven run? One side points to the pure cultural brand, the fair launch history, the still large community, the liquidity it maintains, the distance from the all-time high, and the idea that any return of risk appetite into memes could send the most recognizable names higher first. They argue that at these levels the risk reward looks asymmetric if the next meme cycle arrives. The other side says look at the chart and the nature of the asset. Pure meme coins with no utility often run extremely hard on hype and then correct for years when attention cools. Volume and momentum have already shown signs of fading from the peak, and the market has treated Pepe as a high beta expression of speculative appetite rather than something with durable demand. That's the classic trap setup. The cultural recognition is real, the liquidity is there, but the market is treating the post-hype phase as a long digestion that needs a fresh catalyst before it cares again. Retail often gets caught exactly here, buying the most famous frog will bounce narrative while the chart continues to grind lower or sideways. Risks are high. Volatility remains extreme even at this market cap level. A broader risk of move or rotation away from meme narratives can hit this hard. Downside remains open if the current support band breaks and the correction continues. Retail traders love the long-term cultural icon story and end up holding through multi-month or multi-year drawdowns. Liquidity is solid relative to smaller memes, but large moves can still happen quickly in either direction. There's also the pure narrative risk that comes with any meme coin. Once attention moves on, there is no product, no fees, and no utility to fall back on. Short term, the picture still looks more consolidative and reactive than impulsive. You need to see stronger volume and a clean break of the recent resistance cluster before the short term bias flips with any real confidence. Longer term, it comes down to whether the cultural brand of Pepe can continue to attract speculative capital whenever the meme sector turns. That's the only realistic path that turns these levels into something more constructive instead of just another extended post-hype phase. Bull case versus bear case is fairly clear. Best case, the meme sector hits up again, risk appetite returns, and Pepe, as one of the most recognizable names, leads or participates strongly in the next wave. In that scenario, you could see sharp percentage moves higher simply because of the cultural status and existing liquidity. Worst case is the opposite. Volume fades further, attention stays elsewhere, and the post peak correction simply continues lower or settles into a long, quiet range. In that scenario, the undervalued talk just becomes background noise while price remains largely a high beta reflection of broader sentiment. Nobody knows which way this resolves. The chart is still fighting the cultural narrative after a massive run and a long correction. The brand is real, but the market remains selective about which meme stories it rewards, and the next leg will depend on whether speculative appetite returns. So the real question is simple. Is this the kind of meme that can stage another major cycle from these levels, or are we just watching one of the biggest frogs settle into a prolonged period of lower interest while people argue about valuation?